Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. This, of course, is the podcast that will make you a smarter investor. And I would say a lot of that intelligence is needed to break down all things crypto. So we're phoning a friend here. That is Mark Palmer, Senior Research Analyst at the Benchmark Company. Mark, good to see you. Been following your work for a long time. You're one of the first really analysts on the street covering crypto. So you've survived.
Yes, with the scars to show for it, but thank you. It's great to be here.
So, look, everything post-election, the crypto universe has gone through the roof. Bitcoin, all sorts of assets. Help us understand what is happening, and can this momentum continue, and why, or why not?
Yes. Well, I think the pieces that were necessary to see a significant rally like this were in place even before the big catalyst that we all know about, which is the election on November 5th, where we have President Trump and for that matter, Vice President Vance, who are both very much supportive of crypto. We are hearing about various appointments in the cabinet who would be supportive of crypto. It's really a sea change relative to what had been before, when frankly the SEC and other government agencies were hostile to the crypto space. But as I said, the pieces were really in place before, particularly if you look at Bitcoin. Back on April 20th, we saw the fourth Bitcoin halving. And for those who don't know what this means, every 4 years, according to the Bitcoin blockchain protocol, we see the rewards that are paid out to Bitcoin miners cut in half. And this is part of the design of Bitcoin, which makes it counter inflation, which that's very important because those who are big advocates of Bitcoin point to it as the antithesis of what we see with the Federal Reserve and other government central banks printing money as a means of addressing their needs. Bitcoin, of course, will only have 21 million tokens ever created or mined, which would the final one would be mined in the year 2140.
Hopefully, I'll still be alive. You too.
Well, hopefully, my great-great-grandkids will be holding onto their Bitcoin at that point.
What is everything we've heard so far, President-elect Trump will be friendly to the crypto community. Not a lot of specifics yet. What's your wish list for the Trump administration? What do you think they're going to do, bullet by bullet, to make this a friendlier environment for crypto investors?
Well, first and foremost, it's just get out of the way. Because what we have seen is that the SEC under Gary Gensler as commissioner has used what's known as regulation by enforcement, which is a way of saying that they really didn't have a framework through which they were regulating the space. They just found individual companies that, in their view, were not on the right path, which is the term that Gary Gensler loved to use, and would come after them with cease and desist orders and other means of slowing or shutting them down. This has been a big problem from the standpoint of institutional adoption, because if you're an institutional investor, the last thing you want to do is get involved in an emerging asset class and suddenly have a federal regulator come in and shut down your project.
That's the last thing you need, right?
Exactly. So you're focusing on all of that upside, and the SEC comes in and takes out your knees. That should not be an issue anymore. Of course, we do expect that the SEC is going to continue to police bad actors in the space, but it could be argued that the current SEC, the one that is about to change, has been going after all actors as opposed to just the bad ones.
There's been some chatter on the Trump administration potentially creating its own agency for crypto. Have you heard that, and what does that even look like?
Yeah, it's a bit amorphous, but what we're talking about is a crypto czar, someone who would effectively oversee all of the crypto impacted initiatives across the executive branch. It's not yet clear exactly what that role could entail, but just the fact that there would even be someone who would be focused on making the United States a leader in crypto, in Bitcoin mining, and other areas that President Trump has talked about, is again, it's a sea change. And we are hearing about different provisions that could be put in place. The potential to have the capital gains taxes on crypto investments cut to zero. Of course, there is from Senator Loomis of Wyoming a proposal in place to create a Bitcoin reserve.
Well, does the country need a reserve? So I grew up seeing, all right, there's gold is in Fort Knox somewhere, and we need gold, but does the country need a reserve of Bitcoin?
Well, I think this speaks to the concerns about the Federal Reserve continuing to print money, debasing the dollar, and ultimately contributing to inflation, ironically, since one of the mandates of the Fed is to control for inflation. But the thinking is that if the US government is holding a significant amount of Bitcoin, that would effectively be a hedge against those inflationary pressures. We heard Michael Saylor, the executive chairman of MicroStrategy, say that if the US were to establish a Bitcoin reserve, it could cut the federal debt by $17 trillion over time. I don't know that is necessarily feasible, but at this point, any cuts would be welcome when we're staring at a $35 trillion national debt.
And we're going to talk more about your picks. I want to talk about Michael Saylor, MicroStrategy, and a lot of those names. It does, given the finite supply of Bitcoin, like you mentioned, if we create this reserve, and where does the price of Bitcoin go? I think Saylor was calling for $13 million. You sit here today and it's having trouble breaking through 100,000. Like, there's a big gap between 100,000 and 13 million.
Right. We are looking a little bit more near term and just trying to understand the supply and demand dynamics as it pertains to Bitcoin. Of course, the supply of Bitcoin is capped. The fourth halving that occurred back in April is contributing to a slowdown in the new supply of Bitcoins. And as a consequence of that, it's really about what is the demand part of the equation going to look like. The fact that we are seeing increased institutional adoption of Bitcoin is the key here. Bitcoin is that odd asset class where retail investors really led the way in terms of early adoption. And institutional investors, while they've expressed interest, we saw a Fidelity Digital Assets survey showing that over 65% of institutional investors were interested in crypto, thought that at some point they might invest in it, but again, there were things that were holding them back, including an uncertain regulatory environment. And so as we see institutions follow the lead of BlackRock and others in the space, especially given the fact that at the beginning of the year, we saw the SEC approve the first spot Bitcoin ETFs, and now they're proliferating.
Now you mentioned pension. You mentioned to me off camera, pension funds are getting involved too, right?
They are. The state pension funds of Michigan and Wisconsin have begun to buy spot Bitcoin ETFs. Even the city of Jersey City, New Jersey, has done so as well. The reality
is
those
Jersey roads. Come on, they can use some gains from Bitcoin. I mean, those roads are terrible.
Well, whatever gets you there, right? If 10 years from now we're driving through New Jersey and they're the best roads in the country, well, that might have been the genesis
Thank you,
of
Bitcoin.
It. Exactly, but the reality is that you've got a lot of underfunded pensions. Bitcoin is a non-correlated asset with a lot of potential upside. So adding a portion of the portfolio in terms of in the form of Bitcoin makes sense. And just as you see these same pension funds adding gold ETFs in the beginning part of the 21st century, I think that's probably the best analogy, simply because what started off as very small became huge with GLD and the other gold ETFs, really becoming mainstream over time. If that continues and we continue to see institutions finding ways that they can fit Bitcoin and crypto into their portfolios, well, that's going to significantly increase the demand for Bitcoin, and that's how you get to a significantly higher price. We assume in our analysis of MicroStrategy, for example, that the price of Bitcoin will reach $225,000 by the end of 2026.
Wow, I mean, 2026 is not that far away.
Correct. One of the things that gives us some confidence is the fact that history is our guide. After the first three Bitcoin halvings, that again, these occur every 4 years. So we had one in 2012, we had another in 2016, another in 2020. During the 14 to 18 months following the halving, we saw a significant uplift in the price of Bitcoin, which again really reflects the change in the supply-demand dynamics for Bitcoin. What could be different this time is that you could see institutional adoption of crypto really accelerate that trend.
Well, and that 225, what is probably conservative?
It could well be at the end of the day. You know, what it really comes down to is to what extent do institutions get involved, and to what extent does this newly positive backdrop for Bitcoin and crypto translate into upside.
All right, hang with us, Mark. We're going to go off for a quick break. We'll be right back here on Opening Bid. All right, welcome back to Opening Bid. Having a really in-depth chat here on the world of crypto with Mark Palmer, Senior Analyst at the Benchmark Company. Near and dear to my heart, Mark, is I always want to make sure the retail investor is protected. They hear both sides of every story. And I think, you know, judging the activity on Yahoo Finance, like it feels, or I can see the retail investor coming in here and really getting back involved again with crypto. Like, what could go wrong? Mm-hmm. And what are some of your concerns about this latest crypto movement?
Well, the reality is that Bitcoin is, by its very nature, volatile. And while we expect that the volatility of Bitcoin is likely to lessen over time, especially as we see more institutional investors come in, passive investors who are more buy and hold in their orientation rather than traders, that volatility should decline, but it's still very much with us. And the reality is that Bitcoin is also a risk asset, and as such, it behaves as a risk asset when there are when there's significant stress in the market. Example, you go back to the second week of March in 2020 when it became apparent that the COVID-19 pandemic was going to be a major world-changing event. You know, the price of Bitcoin plunged. You know, at that point, it was not about Bitcoin as a store of value or as a hedge against inflation or any of these other factors. It was simply, this is a risk asset. Risk assets are falling. Bitcoin is falling with them.
Are bad actors just going to be part of this space and you can't do anything about it as an investor?
I believe they will. The reality is that bad actors are a part of the US dollar space. And if you look at the number of scams that are out there that involve US dollars, you know, they are very significant, but that context is not usually pointed to by those who are trying to make Bitcoin out to be some sort of a rogue asset. You know, the numbers that, you know, coming out of various studies have shown that, yes, Bitcoin and crypto are used for illicit means, you know, particularly ransomware and things of that nature. But again, you know, the extent to which that is the case, I think, has been blown out of proportion, particularly when you look at it relative to the amount of nefarious activity that's going on with US dollars.
Talk to us about, you have coverage of MicroStrategy.
Yes.
There's a lot of different ways you can go with that one. Michael Saylor, of course, he's come on Yahoo Finance, outsized personality in the industry. But at the end of the day, is MicroStrategy shares overvalued versus Bitcoin?
Well, this is a timely question because just this morning I raised my price target on MicroStrategy, on which I have a buy rating, to $650. It had previously been $450. Now, my valuation methodology had been very simple. I was projecting the number of Bitcoins that the company was going to hold a couple of years out. As I said, I expect that the price of Bitcoin, assume that the price of Bitcoin will be $225,000 by the end of 2026. And so we then have the value of the company's Bitcoin. At the same time, MicroStrategy started as a software company.
But you could see, go to their annual report, I mean, it's all there. But now they're just, you think MicroStrategy, MicroSeller, Bitcoin, not even software.
Well, and I think that, frankly, that's appropriate, because as much as the revenues and earnings that the company is reporting are coming from its software business, in our valuation, which again includes the Bitcoin holdings value as of the end of 2026 and a couple of other factors I'll get into, but the total contribution to that from the software company is $2 out of 650, to give you a sense of that. Now, there are some synergies and other reasons why the software company is supportive of MicroStrategy as a whole, particularly its Bitcoin business, but the math says that it is not significant when it comes to the valuation of the stock.
I've never seen a strategy like what MicroStrategy is doing. I was thinking about what can you compare it to, and I can't compare it to many other things. It'd be like if Target CEO went out and started stocking up on Tesla cars for some reason to buy, so they had batteries. It's just strange. What do you think about what he's done the past year?
Well, I think that there are certain analogies that can be made to, for example, oil companies that have reserves, and that they are valued not just based on the reserves, but also the likelihood that they're going to tap those reserves over time and everything that goes into that. You could say the same thing about gold miners, for example. Our valuation introduced this morning refers back to a KPI that MicroStrategy introduced called BTC yield. And BTC yield represents the amount of Bitcoins that the company buys period over period, divided by the company's total diluted shares. So the idea here is that BTC yield demonstrates the amount of additional value that the company has created through its treasury operations. And so through last week, the company's BTC yield for 2024 was over 41%. The company's been extremely active in the market. The price of Bitcoin has been supportive. So 41%. What does that translate into in dollar terms? $7.7 billion. So what we are saying is that that $7.7 billion in the context of MicroStrategy is analogous to earnings. And so like earnings, it can be projected forward, and you can attach a multiple to it based on future expected growth.
This is one hell of a model. I mean, tell me you have like 9 associates working your model with you.
No, it's pretty much me and sitting down and hashing all of this out.
But this is like I used to be an analyst, so I used to cover softline and hardline retailers. Like, I'm thinking back now to the models that I had to do. I was nothing like this. This is different level stuff.
It's a different conceptual framework, certainly. Yeah. At the end of the day, the math is not that complex, though. It's more, is the market going to better understand and embrace this particular approach? And of course, there are significant detractors. And it's the detractors who are saying that the price of MicroStrategy stock should not trade anywhere above the value of its Bitcoin holdings. My argument would be that any company that is producing a commodity is going to be continuing to do that over time. Mm-hmm. And it's going to have cash flows that it's going to be generating accordingly. Those cash flows are the basis of valuation. So I think that there's a piece missing for those who are simply looking at the company's Bitcoin holdings today and looking to value the stock based on that. So yes, we see that shares of MicroStrategy are trading at something close to 3 times net asset value. I would argue that based on the company's ability to continue to tap the US capital markets, take the proceeds and buy Bitcoin on a repeated basis, that premium is justified.
Does an investor have to own MicroStrategy and Galaxy Digital?
If you were an institutional investor and accustomed to all of the sophistication of the biggest shops on the street, you can go to Galaxy Digital and see that same level of sophistication applied to crypto. So as institutional investors get more involved in crypto, Galaxy Digital stands to benefit from that. Now, there are other elements of Galaxy's business. It has a big proprietary book in which it holds a lot of cryptocurrency. It has a venture capital arm and has venture capital funds that spring off of that. As a big asset management business, it's one of the leaders in crypto ETFs, including spot Bitcoin ETFs, and has big partnerships with the likes of Morgan Stanley and Invesco. But what's really interesting here is that the company's involvement in Bitcoin mining, which was really the tail on the dog of this story for quite some time, has become front and center. And the reason for that is not because of Bitcoin or crypto. It's because the company, back in December of 2022, which was a time when a lot of folks were running around saying that crypto was dead. This is after the collapse of FTX and the various other disasters that happened in the space. You saw some of the Bitcoin mining companies go bankrupt. One of those that got into trouble was Argo Blockchain, which owned a facility in Texas, West Texas, known as Helios. And so it put it up for sale, and Galaxy Digital bought that for $65 million. Flash forward to 2024. Suddenly, you have a situation where those Bitcoin miners that have data centers that can be used to power artificial intelligence and high performance computing projects are incredibly valuable.
This guy's sitting on land worth billions, right?
Well, that's what's interesting, because if you look at the deal that everybody talks about in this space, which was Core Scientific, the Bitcoin miner, entering into an agreement with AI hyperscaler, which is CoreWeave. That was a 12-year deal with revenues projected at $8.7 billion based on 500 megawatts of exposure through power exposure that it's providing. Galaxy Digital has over 3 gigawatts of power, basically 6+ times of the amount of power that was involved in that original deal. And so we just heard, when the company reported its third quarter results, that it has a non-binding term sheet in place with a US-based AI hyperscaler. So given those numbers, you can only imagine the number of folks who are interested in AI who suddenly are looking at Galaxy Digital.
Yeah, no, it's going to be fascinating to follow these guys. We got to leave it there, unfortunately. I could talk about this stuff all day, for real. Mark Palmer, Senior Research Analyst at the Benchmark Company. Good to see you. Really enjoy your work, and we look forward to staying in touch.
Thank you, Brian.
All right, that's it for the latest episode of Opening Bid. Hit us with those 5 stars on Spotify, likes on YouTube, likes on Apple Music. We appreciate the love. It encourages us to even crank things up by 10 notches. We'll talk to you soon.